Apple started as a small-scale personal computing company in 1976, launched by Steve Jobs, Steve Wozniak, and Ronald Wayne in Cupertino, California. Initially focused on creating user-friendly computers, Apple's early products like the Apple II paved the way for the company's reputation for innovation. However, Apple's journey to becoming one of the world's most valuable companies truly began in the late 1990s and early 2000s, when it expanded into consumer electronics with products like the iPod and eventually the iPhone in 2007. This transition to consumer electronics marked the start of Apple's reliance on a globalized supply chain, with China becoming its most important manufacturing partner. Strategic shift to China's manufacturing hub. Apple's expansion into China was fueled by a search for cost efficiencies and production scalability that could not be matched in the US. In the early 2000s, Apple established partnerships with Chinese suppliers, most notably Foxconn, which would become Apple's largest manufacturing partner. By 2010, around 85% of Apple products, including the iPhone, iPad, and Mac computers, were being assembled in China, positioning the country as a core pillar of Apple's supply chain. Foxconn alone, Apple's primary assembler, employed over 1 million people in China by 2013. Reports estimate that by 2019, around 47% of Apple's suppliers were located in China, underscoring the country's central role in Apple's global production network. According to a study by the Massachusetts Institute of Technology, MIT, Apple's reliance on China-based production saved the company up to 30% in production costs, thanks to economies of scale, low labor costs, and the concentration of suppliers capable of producing the high-quality components needed for Apple's devices. The benefits of this approach were demonstrated with the annual release of new iPhone models, with production capacity quickly scaling to meet global demand. A Harvard Business School study found that China's flexible manufacturing infrastructure allowed Apple to respond to sudden shifts in demand and make production adjustments more effectively than any other location. Supply chain efficiency and China's manufacturing ecosystem. China's manufacturing capabilities provided a unique advantage to Apple. A 2017 report from the Journal of Global Operations and Strategic Sourcing highlighted that China's robust supply chain infrastructure played a significant role in Apple's success. Apple's manufacturing process involves hundreds of suppliers, which contribute components ranging from microchips to glass displays. Chinese suppliers and partners developed a specialized skill set to meet Apple's stringent quality requirements and complex production demands. The research emphasized that Apple benefited from the presence of skilled labor at scale, a high degree of production flexibility, and rapid response times, all of which were essential in ensuring that Apple maintained its position as a leader in consumer electronics. A study from Stanford University pointed out that China's commitment to manufacturing infrastructure, particularly in regions like Shenzhen, has created a highly interconnected ecosystem of suppliers, logistics companies, and assembly plants, which has allowed Apple to operate with incredible efficiency. This ecosystem also enabled Apple to experiment with innovative materials and production techniques, such as custom metal alloys and ceramics, which helped Apple differentiate its products from competitors. Such innovations, which may have been more expensive or logistically challenging in other regions, were feasible in China due to the availability of specialized suppliers in close proximity to Apple's main assembly sites. China as a growing consumer market. While China became the backbone of Apple's manufacturing, it has also evolved into one of its largest consumer markets. The release of the iPhone in 2007 sparked considerable interest among Chinese consumers, and Apple's brand has since become a status symbol in China. In 2024, Apple reported that revenue from Greater China, encompassing mainland China, Hong Kong, and Taiwan, represented nearly 20% of its total revenue, translating to approximately $15 billion in quarterly revenue in that region alone. According to Statista, Apple's revenue from Greater China was consistently between 15% to 20% of its global revenue from 2016 to 2024, underscoring China's critical role as a revenue driver for the company. Apple's partnership with China Mobile in 2013 marked a turning point, allowing Apple to reach millions of potential customers. With over 900 million subscribers at that time, China Mobile became an instrumental partner in expanding Apple's reach within the country. Research from the University of California, Berkeley, found that as of 2023, more than 50% of China's middle class owned at least one Apple product. Apple responded to this growing consumer base by investing heavily in retail operations in China, opening flagship stores in major cities like Beijing, Shanghai, and Shenzhen. Additionally, Apple made significant efforts to localize its products and services, adapting its marketing strategies to Chinese consumer preferences, and even introducing features tailored specifically for the Chinese market. The double-edged sword of dependence on China. Apple's reliance on China for manufacturing and sales has been an immense asset, but also presents vulnerabilities. The COVID-19 pandemic exposed the risks associated with relying so heavily on a single region for production. In early 2020, Apple faced substantial supply chain disruptions due to factory shutdowns across China, leading to significant delays in the production of the iPhone 12. According to a report by Bloomberg, Apple's global iPhone shipments were reduced by as much as 30% during this period due to supply chain constraints in China. This reliance has sparked discussions within Apple and among investors about diversifying its supply chain to other countries like India and Vietnam, where it has begun establishing smaller production facilities. However, a complete shift away from China is challenging due to the entrenched infrastructure and logistical networks that China provides. In 2024, Apple's supply chain report indicated that 75% of its top suppliers still operated production facilities within China, and Chinese-made components accounted for over 50% of the total value of an iPhone. The complexity of Apple's production process and the specialized nature of many of its components mean that transitioning to new suppliers in other countries would be a costly and time-consuming process. Counterpoint Research estimates that a complete move out of China could cost Apple upwards of $50 billion, largely due to the need to replicate specialized skills and supply chain infrastructure elsewhere. Economic and geopolitical considerations, the US-China trade war and increasing geopolitical tensions between these two superpowers have further complicated Apple's reliance on China. In recent years, both the United States and China have implemented policies affecting foreign technology companies. For example, China has tightened regulations on data storage, cybersecurity, and foreign investment, which have added layers of complexity to Apple's operations. In response, Apple has made some concessions to operate in compliance with Chinese regulations, such as moving Chinese user data to servers operated by Chinese companies. A report from the Council on Foreign Relations notes that Apple's delicate position between two major economies means it must balance compliance with Chinese regulatory demands while staying in line with American policy pressures to reduce dependency on China. As of 2023, 20% of Apple's revenue was generated from China, and moving away from this consumer base would significantly impact Apple's earnings. However, the same dependency also presents Apple with potential risks, especially as the Chinese government increases its support for domestic tech companies aiming to challenge Apple's dominance in the smartphone market. China's enduring importance to Apple's future. China's role in Apple's ascent cannot be overstated. As both a manufacturing powerhouse and a crucial consumer market, China has enabled Apple to scale its production, innovate rapidly, and sustain a steady revenue stream from one of the world's largest economies. From cost-effective labor to a highly adaptable supply chain ecosystem, China has allowed Apple to become the global tech leader it is today. With approximately 75% of Apple's suppliers based in China and nearly 20% of its revenue coming from Chinese consumers, the relationship between Apple and China is deeply intertwined. Despite efforts to diversify, Apple's dependence on China is likely to continue for the foreseeable future, albeit with some gradual shifts as the company navigates economic and political challenges. As Apple moves forward, its balancing act between production efficiency, cost-effectiveness, and geopolitical considerations will play a crucial role in shaping the company's long-term strategy. Apple's story is a testament to the power of globalization and the significant impact that China has had on the world's technology landscape. And it illustrates the complexities facing global corporations in an interconnected world.